19 days into 2021 and things have not changed much from last year, it seems, with many countries still in lockdown. Economies continue to struggle. But what are the investor lessons from 2020 worth remembering in 2021 and beyond? Well, Debra Slabber, Business Development Manager at Morningstar Investment Management, will break it down for us. Debra, very good morning. And yes, I'm hoping that you are going to break it down because laymen like myself don't quite understand really how this actually works there. So where, firstly, do we find ourselves picking up in 2021 in terms of the bank account, in terms of who's putting in and what's not coming in?
Yeah, hi Uveka, thank you so much for having me here. So it was a very interesting start to 2021. It almost feels a little bit like deja vu to me in terms of where we ended off 2020 or where we were roughly a year. But I think what's more important is that 2020 came about with a lot of lessons for investors. So markets are actually at an all-time high. There's a big disconnect between economies and markets. So from a market perspective, things are looking up, but from an economic point of view, things are not looking as good as yet.
Explain, though, what that means. I mean, when you think markets are looking up, you automatically think, yes, the world is doing better, there's money going around. So what is that disconnect? What happens in that disconnect? Or doesn't happen?
No, so I think the big thing to remember there is that when we talk about the economy and when we talk about markets, the economy is backward looking, so it looks at things that already happened, and markets are forward looking. So if we compare it to 2020, a couple of things happened there simultaneously. So the outbreak of COVID-19, like we all know, the collapse in the oil price, the global liquidity crunch, plus it was a US election year. And if you think about markets today, I think it actually looks quite different. So we have an enormous amount of stimulus going around in the system. We've got more certainty around US politics to some degree. We've got the vaccine rolling out. And I think markets have a little bit of a better understanding or better idea of the impact on earnings of companies due to these lockdowns. So I think we're in a different space today.
So, I mean, it's almost a year that we're sort of dealing with this pandemic and lockdown and the effect on business as well. So what for you are the major lessons? Let's talk about the good, the positive lessons that we can take forward.
Yes, I think one thing that 2020 reminded us about was that the fact that markets are just inherently difficult to predict. And secondly, that markets simply cannot be timed. And I think we shouldn't forget that. No one could foresee how quickly markets were going to sell off. And more importantly, no one actually knew how quickly it was going to recover. And I think it's quite important to realize that it's not uncommon for investors that as they become fearful and uncertain, they want to sit on the sidelines. So just until things get a little bit better, but they make the mistake of trying to time the in and out of the market. So at Morningstar, we've done some research looking actually at the impact of investors that's trying to time the market. I'm going to share that with you because I think the research is actually quite fascinating. Look, let's say roughly in the past 25 years, if you were invested in the Aussie, if you just missed the 25 best days in the market, so shaved off half of your return. So to put that into context, if you think about the past 25 years of investing, around, let's call it 6,000 trading days, if you just missed 25 days, okay, it's less than 0.5% of the time, you severely impacted your outcome by shaving off half of that return. So that for me is the biggest lesson. Remember that we can't predict markets, we cannot time it. And there's another lesson actually that also came to light in 2020, and it's that the good follows the bad and vice versa. So what I mean by that is that the best days come after the worst days because the market tends to overshoot on the upside and it tends to undershoot on the downside. So what we've learned is that when it comes to markets, things are never black and white. Always somewhere in between. So the truth is always a little bit gray. Unfortunately, what investors need to do is they need to remain invested throughout the good and the bad times to reap the benefits of an investment strategy. That's unfortunate.
And I see that you also talk about an emotional perspective, Debra. I'm assuming that we should not let emotions get the better of us and sort of hang in there. You know, we've proven to be resilient. Sort of hang in there and don't give in. Yeah.
Absolutely. So I think, if anything, emotions are the worst advisors. So never listen to your emotions when it comes to investing. It won't tell you what's the right thing to do. So I think that's quite important.
All right, we'll leave it there for now. Thanks very much, Debra Slabber there. Well, some sound advice to take you further on into 2021. Take those lessons from the past year or so.